when you're in that situation and adrenaline's pumping and all that stuff, then you don't really think about it too much. You're more like gambling.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So a trader the other day was mentioning to me that he has this issue where he keeps blowing up his accounts and he really needs help. You know, it's kind of a desperate thing that many of us can probably relate to. And so the question is, what do you do? Like, if you're blowing up accounts, where do you start?
Well, I think it starts with awareness. Like, why are you blowing up the accounts? A lot of people who blow up accounts don't know why they're blowing up accounts, which is kind of, when you're in that situation and adrenaline's pumping and all that stuff, then you don't really think about it too much. You're more like gambling. You're just trying to make, double your account, triple your account, whatever it is. But I think the first step is awareness. Like, okay, figure out why you're blowing up the account. Do you actually have a strategy? Are you risking too much? There's a guy in my group. He was like, yeah, I'm blowing up my accounts and, I'm risking like 8 or 9% a trade. And I was like, well, that's probably where you should start. And he actually had an interesting mindset that I could bring up here. He said that he was trying to pass a funded trader program, and he thought it was a lower risk to risk more money because the opposite of that would be not passing the challenge, which I didn't understand logically, but I think that's how people think sometimes. If they don't understand the risk parameters and that you're looking for generally a smaller risk, even if you're trying for a high win rate or a big R multiple, it's always about the small risk in the beginning, right? And so I think that's part of it, the awareness, and then also understanding the mechanics of not risking too much on every trade, because that's going to put you in a hole really quickly if you're on a losing streak. So I think that's two things. And the third thing I would say is, maybe, what are you trying to get out of it? I think a lot of these people are just trying to get rich quick and double their account. And if you really want to be in it for the long term, you have to understand, okay, I'm not going to gamble here. I'm going to take educated guesses and keep the risk low and really understand the mechanics of trading, and not just try to think that it's a lottery or something. I mean, that's what comes to mind. What do you think?
Yeah, that's interesting. I think some of those funded account things, they not all of them, but some of them have a rule where you actually don't qualify if like one trade, do you know what I mean? Like if one trade is an outlier, like a really far outlier, and do you know what I mean? Like one trade makes 10% and the other one's all made 0.2% or something like that. I think some of them have that rule where it's like, nope, sorry, buddy, that could be luck, right? In other words, they want to see kind of a consistent, build. But what comes to mind, and you guys can look him up, Larry Williams, the trader who won the contest, and his daughter won the Michelle Williams, she's an actress, she won the trading contest. He said that, and I've backwards engineered his system that he used to win the trading contest. He basically had a 60% win rate and a 2-to-1 reward risk ratio. That's what he was trading. That was the system. And then he used Ralph Vince's optimal Fs to just max it out, right? Which is why he had wild swings. But what's interesting is he says that trading is all about finding a really low risk idea, risking very little to potentially make a lot more, right? So I guess 2-to-1 to him is a lot more, right? Mm-hmm. And that's it. That's all it is. And so if you take that, if you believe that to be true, then what are you going to do as a trader to backwards engineer that? How are you going to create that? How are you going to take a low risk idea that can potentially make you a whole lot, right? Some people take different approaches. Like Matthew in London, he wins 9% of the time, and his winners are 20 times bigger than his losers. So you can do the math on that. If you lose 91% of the time, but you win 9% of the time, where you get 20-to-1, how does that make money? Well, it only makes money if you consistently do it over and over again, and you risk such a small amount that you can have 91 losing trades in a row, right? Like that's and survive. The account has to survive, or more. It could be more than 91. So yeah, so that's what I think kind of, that's kind of the idea. If you can get at that core idea, and if that resonates with you and that makes sense, because some traders will disagree with that. Some traders will say what trading is being right and taking big risks, right, to make a small amount, but being right 90% of the time. Okay. So 10% of the time they get wiped out with big losses, and 90% of the time they make little wins. Okay. If you're in that school, then you can read all about what happens to you when you do that. Look up Victor Niederhofer, The Education of a Speculator. See his story, right? Or you can just Wikipedia him or whatever, and see what happens to those people. So there's different approaches, but my belief is that, Larry Williams is correct, basically. Yeah.
Psychologically, well, I don't know. I think there's pluses and minuses to both sides psychologically, right?
Absolutely. Yeah. Like psychologically, like the guy Matthew in London who does the 91% loss rate and he has a 9% win rate, he said he automated it. Now he automated it because he has another job that he has to deal with all day long. And this was on the lower time frame. But he also automated it because he recognized, if I have 91 losers in a row, am I really going to take the next trade? Like, am I really going to do that?
Yeah.
Right. And so he's like, as I see it, this is the only way to do it. If I'm going to trade this way, right, and have a 20-to-1 reward to risk ratio and a 9% win rate, there is no way that I can count on myself to take every trade. It just ain't going to happen. So I need to have the system, have the EA take the trades for me. So yeah.
So I guess that brings up a good point. Like, what's the psychology behind the person who likes the big winners, or the smaller winners with the small risk, but then versus the person who likes the low win rate but the really, really big winners? And it's interesting, like how those two types of mindsets work, right?
Yeah, and if you read, there's books and studies on professional gamblers who, and we've probably talked about this before, but they look at themselves as almost living forever, like having a really long life, and so like a casino does. So they just need a little edge, right? Because all they really want to do is survive and play out that edge, keep playing out that edge, and then collect that the profits build over time. So and that's really interesting to me, because in a sense that supports the idea of the lower win rate, high reward to risk ratio, right? Whereas the person who wants to win nearly all the time but take a very small win, is happy to take a very small win with a relatively large risk on each and every instance, they're more about instant gratification, aren't they? Like, they don't really want to play out the long. They don't see the big picture. Yeah. And so the idea is that these people with a high risk IQ, they are able to sort of in their mind kind of see things for the long haul, which is what the casinos do. Casinos don't really care if they lose on one day in the they have all the numbers. If the slot machines lose one day overall, that's okay, right? That's all right. I mean, they're paying back 97% of the money that goes into the slot machine, right?
Yeah.
So I mean, they just look at the big picture, but they also track it. They also track all that data, so they know when something's wonky. That's a big tip for us traders, isn't it? We should be tracking all that stuff and know when something's gone wonky. Yeah.
It reminds me of that scene in what's that movie, Rounders, where Matt Damon says to that other poker player, "You just want to grind it out in your leather ass," or something like that, right? And he was more about like making the big wins, where that guy was more about the long term, like making
long term.
Yes, right.
Yeah. And it's interesting. Like, if you talk to these guys, one time I went to Vegas and I met some friends there, and one of their friends, she was there and she knew a bunch of professional gamblers, right? And I was asking her questions and we actually sat with a couple of them and watched them spend big money and stuff like that. This was probably like 15 years ago. It was a while ago, but it was interesting, and I was asking her questions because she was like, "Look, people say that it's all luck and all that." She's all, "Then why do my friends keep winning? You know what I mean? Are they just lucky?"
Same
like,
people
what's
at the
going
final
on?
table,
like,
right? Same people.
Yeah, these poker players keep winning. She's like, "My friends are professional, they're professional gamblers. Why do they keep winning? If that's, you know what I mean? If it's all luck, obviously there's an element of luck, and that's the same in trading. You don't ever know what's going to happen on the next trade, but at the same time, there is also edges, and if you're playing that edge over the long haul, maybe you're gonna, maybe you're gonna grind it out.
Yeah. I mean, poker is a tough one because you have to read one person, right? Whereas in trading, I think it's a lot easier because you're reading a group, and the group psychology is a little bit easier to read.
Yeah, it depends on your skill, right? Yeah, I would agree. I agree. Like if you watch the really good poker players, they are extremely good. Well, they would say an interpersonal intelligence. So Gardner, there's a guy named Gardner who has all these different levels of, like, there's kinesthetic, so how you move your body, and there's like, verbal, so how you communicate, and then there's interpersonal, which is how you kind of relate to people, which is communicating with people in a one-on-one and also reading them, right? And I look at those pro poker players that you're talking about, and I see a lot of that. Like I see those guys, they know exactly what they are projecting, and they're very attentive at what other people are doing, even if they don't look like they are. They might not. They might just look like they're just there with their sunglasses or whatever. They're paying attention. I guarantee you, they know, or they have they have an operating theory in their mind about what other people. What are they? It's all about the tells and all that. What are they doing? What are they thinking? They're reading the other people too, and trying not to let out what they're thinking at the same time, right? It's a real fun game when you think about it.
Yeah. And some of them are really good at pushing buttons. They know where to push and kind of pry the next person and see what they're going to do. Right?
Yeah. Like a narcissist, or like, you know what I mean? Like any other psychopath that you run into in everyday life. Like, you know what I mean? They'll do little things to see, or like a brother and a sister, right? Or a brother and a brother, whatever, like siblings. They'll poke, they know exactly where to poke each other, right? To get them. Yeah. So that's part of the game too, is you kind of test them out and try little things and see how they react. And then you're like, okay, now I got to read on how this person's going to react. So yeah, really, really interesting.
Cool. All right. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.